What's good, people, traders, and dedicated gold chasers? Welcome back to another podcast at the Modern Day Trader. And this week, what you guys saw this weekend is that we dropped my plan, obviously, and it was quite in depth. And this week round, we're going to be going into Sam's plan. Sam's going to be explaining really in depth what he's looking for with regards to his approach to the market, with regards to his trading environment, trading parameters, and etc. Everything that he is really just doing on the 100K challenge and trading even on his 10K account, like just his approach in the market. So Sam, without further ado, do you just want to like jump straight into it? I know it's been a busy week, but obviously you're going to give the people an update on your review video this weekend when it drops tomorrow. But do you want to just jump straight into your trading plan, bro?
We'll do, my G. Yeah, and firstly, I'll just apologize because this was actually supposed to be done that week we did your plan, and so it's always been like I've been holding out on the Oaks, but because I've been talking a lot about the plan. Obviously, my review before we started the challenge touched on like my flow charts, which is kind of just like the trade environment, the parameters, and the confirmation. But I'm keen for this because it's gonna like dive into like the detail of how I kind of got to that, because that's almost like the end product. And then this is the plan that I have is kind of like detail on how do I arrive, like how do I actually process those decisions and how did I get to those questions that obviously lead to the outcome. So my trading plan is kind of broken down into like three like sections. The first being my sort of decision based process, and that covers what I mainly show on like my reviews and my back testing, the flow charts that you guys see, which is my trading environment, my trade parameters, and my entry confirmation. Um, and I think as traders, we focus a lot on that only within our trading. But the other sections, which are I think equally, if not more important, are how I stack probabilities in my favor. That's basically my risk management as well as my trade management, as well as then my process and intentions, which touches a bit on my goal for the next 20 trades, which is just the sample set, as well as then what I define as the processes of a consistently profitable trader, which is also, I think, the plan that we had coming into this, but then really just the things I do that reinforce kind of this whole process of developing ourselves as kind of like a trader and making sure that we are doing the things that lead to the consistent outcomes. So diving into the first section, which is my decision-based process, and starting on the first one, the trading environment. So identifying my environment basically looks at what market I'll trade. That's, forex market, foreign exchange market. Look at the pairs that form part of my weekly watch list. So I don't think my strategy is limited to any one pair, or these pairs that are on my watch list, which are Euro USD, AUD USD, Pound JPY, and USD JPY. But I also am very conscious that pairs have their own tendencies and respond in like their own unique ways to any strategy. And I think while I'm at least getting more familiar with my plan, because I'm arguably still very early in like the development of my plan, even though there's like early indication that it's like a plan that I'll stick with very long term. And like obviously there'll be refinements over time, but to limit obviously the random variables that come with trading different pairs, I've limited it to these, trading pairs. And I think that's obviously also going to filter down the number of setups that I have, because I'm only focused on a specific number of pairs. So there's those 4 setups. I did want to add USD ZAR to that, because it's like my problem child that I've come up with, bro. But Alpha Capital don't have it as part of their pairs on their broker, because it's kind of like their broker that they use, because they were originally, I think, a broker, and then being a prop firm is like an additional business that they have, but their core business was actually a broker. But I think once we go back to FTMO at some stage, or if I add an FTMO account, then USDZAR will definitely make a comeback. So those are the four pairs I trade. I trade two time frame or two sessions rather only. That's London kill zone, New York kill zone, and that's 9 to 12 South African time for London, and then 3 to 6 South African time, 3 to 6 p.m. South African time for New York. So those are kind of like that sort of starts to frame my environment. But part of that trading environment is also my high time frame market sentiment. So this is basically where I determine if the environment is conducive for me to identify my trading parameters. And again, I think in this section, I'm mainly looking at whether the market is trading in alignment with the concept of fair market value. And fair market value is basically looking at whether price is in equilibrium, premium, or discount, in the sense that smart money, as ICT coins it, want to fill their orders at fair value. So if they're long, they want to get out at a premium. They want to offload those long positions in a premium. If they're short, they want to offload those positions in discounts, because as they offload shorts, they obviously go long. As they offload longs, they obviously go short. So you look at from a high time frame perspective where those orders are essentially resting, and I look to trade either towards premium from discount, or other way around, towards discount from premium. And then when we in premium, we trade from premium, because now the high time frame sentiment is short, and we trade that down, obviously towards discount, and vice versa. When we're in discount, we look to buy. So yeah, longs for me are identified, and the bias will be bullish when the market is at equilibrium or deeply discounted. And then shorts are identified, and the bias will be bearish when the market's at equilibrium or trading at a premium. And what this high time frame sentiment also does for me is that's where I identify what setup I'll be trading, because of those scenarios that I framed, either trading towards premium, towards discount, from premium, from discount. I essentially have four sort of trading setups that I'll get to maybe in the next when I get to my parameters. But at this high time frame level, the key time frames I use are the daily and the 4 hour. So the daily, this time frame, I kind of use to gauge where price is after an impulsive leg relative to that EPD level. So I start with looking at the daily swing, either higher or lower. Because obviously, for example, if we swing lower, then we're looking at price to then correct. I start identifying opportunities once a counter trend has been established bullish that is coming now into premium, because then I can start taking longs up into premium. And then once price gets into premium, I'm looking then to take shorts in alignment with that daily bias down to that daily level. So my daily kind of determines the range that I'm trading in, either towards EPD or away. And then the 4 hour is used to determine what the trend is in alignment with that daily time frame. So when the market's pro trend on a 4 hour, again, looking at our the daily example of bearish leg, market's pro trend, it means that we bearish, we're in alignment with the daily. And then counter trend is obviously bullish in that sense. So my definition of counter or pro trend is very dependent on the daily bias. And that's how I kind of frame that. So that is then how I almost frame the high time frame. And when I look at a setup, I normally start on that time frame, and maybe I'll look at it even if it's before kill zone, and I've identified that I'm looking for, because I'll normally do a scan just to see what the potential entries are. But even once I've done that and I've said, okay, I'm looking to short in this session, I go back to this flow chart and I say, okay, have we mitigated EPD? If we have, okay, what's the trend, counter or pro? Okay, if it's a counter trend, pro trend, am I looking to trade in alignment with that counter trend or pro, or in alignment with that counter trend, or counter to that counter trend as well, which is the setup differentiation that we'll get to in a bit. But that's essentially the trade environment, and that
Okay.
again is just identifying whether a trade is potentially
Mm.
available. It meets those like initial conditions.
Uh,
Um,
yeah.
somebody else. So,
So, Sam, I have a couple questions with regards to the trading environment. I've noticed that you
mm,
mentioned your kill zone times. Is that
mm,
with or without daylight
mm.
savings? Because I'm assuming it's going to change with daylight savings.
Yes, so that is without daylight savings. I haven't added a section with, which I do need to, but I know daylight savings is in March, if I'm not mistaken.
It's actually
Well,
around the
between
corner.
March and
It's
and
between like October and March, bro. So
October,
in the next
March.
month or so, we're gonna go into
Yeah,
daylight savings. Uh,
yeah. So I will adjust that accordingly. I think everything moves forward
an
an hour,
hour
if I'm
forward.
not mistaken, or
Yes,
back
an hour
hour
forward.
forward. So London opens at
10.
10 now. 10. No. So
Mm-hmm.
it will shift then. So London will be 10 to 1, and then New York will be 4 to 7. Once that
Mm.
shifts, because then, oh, yes, the 4 hours then also shift times in that way.
Yeah. So then
So,
it
yeah,
moves to 8 o'clock.
the current is without daylight savings parity then.
Okay. Okay. Perfect. And then the last question would be with regards to so premium is associated with shorts, right? So
Mm,
for instance, if we have a daily impulsive leg to the downside, right?
mm,
And we have the impulse, but we don't have the correction, you're obviously going to have your equilibrium, which I'm assuming is at your 50% pullback.
mm.
And then where would premium then be? Is premium above equilibrium?
Yes, yes. So, like you said correctly, equilibrium is the 50% level. And I use this, I gauge this with the fib tool. And
Yeah.
then what I coin my optimal trade entry area, which is also now premium or discount, is anywhere from the 62%
Okay.
fib right up to the 79% level, with the
Okay.
halfway point there marked as well, the 70.5% level. So anywhere between that 62% to 79% level is my premium or discount areas. And that's what's referred to as your optimal trade entry area.
Okay.
That's
So then, okay.
yeah.
Oh, okay, I understand that. So then when you say you're trading into that area, you then be counter trading the daily time frame, but you could be trading the 4H time frame into that area.
Yes, yes, correct,
Okay.
correct.
Okay. So then if
The
you,
only thing is, yeah.
hmm? Now, I was just about to ask. So let's say, for instance, you have the bearish push and you have a full week of 5 days, daily candles pushing to the downside. We obviously formed a trend to the downside on the 4H at that point. We shift the trend. Would you then be looking for a discount purchase to buy into a premium short on the daily? So, discount from a 4H perspective to buy all the way into premium on the daily time frame, which would essentially be a counter
Can you
trend trade.
explain that again?
So we have a impulsive push to the downside, impulsive leg, right, to the downside,
On the
which
daily.
basically means if you're going to look for continuations, you're going to be looking for premium or equilibrium, right, from the daily perspective
Mm,
after the correction. But when you jump
yeah.
down to the 4H, and what you've noticed now is that the 4H actually shifted structure bullish, right?
Mm,
But you notice
yeah.
there's a counter trend in the opposite direction of the daily time frame. Would you then be essentially looking for discounted like price action on the 4H to enter or from to take it to the premium or equilibrium on the daily? Would those be your target
Essentially,
points? Oh, okay,
essentially.
okay.
So there's more significance placed on the daily EPD level, so equilibrium premium discount, and not so much placed on the 4 hour. The 4 hours mainly just used for the trend. But then when it gets to entries, which I'll get to in my trade parameters, there's more significance placed on the 1 hour range and those
Okay.
EPD levels within the 1 hour, not so much on the 4 hour.
Okay.
But yeah, I don't look very often at whether 4 hour in my advanced self review. I do take note of whether 4 hours at fair market value EPD, but sometimes it just adds a bit too much confusion because it's like your daily will be in premium, then your 4 hours in discount, and your dailies in premium. Then it's like, what do you place more significance on? So the daily, the 1 hour is a good gauge for the daily, which is why I use that those two mainly. But it's what you said is basically what I look for. Yeah. And more often than
Okay.
not, the 1 hour range frames the 4 hour sort of fair market value in
Mm.
any case. Because if
Okay.
the 1 hour is, in discounted premium, the 4 hour usually will be as well.
And last question on this. So obviously my question was centered around counter trend trading, right?
Yeah.
Uh, what have you found? What is like the percentage win of counter trend trading into a premium or discount on the daily versus trading out of a premium and discount? So obviously price pushed to the downside. Now we need to correct to get
Mm.
into that equilibrium. So what
Yeah.
what have you found so far in the past month or two with regards to stats that like trading the counter trend essentially into the
Mm.
daily time frame versus trading out of that daily equilibrium? Like, what are you more comfortable with, and like what have you found of the stats on that?
Sure. Most wins have been taken from pro trend daily setups. But again, there's, to be honest, not enough data for me to develop like an actionable insight off that. But I get what you're asking. And it's something I am monitoring, which is why I think I was glad to get to like the differentiation of the setups, because that's
Mm,
something I want to monitor. Like
yeah.
what, and arguably it's something that uh, contributed to how I revised my plan, because there's a bit more confirmation that I look for in my counter trend plays,
Okay.
because I did see that there was a, well, with the trades I had, those 13 or 14 at the time when I revised, more losses taken on like low quality counter trend
Okay.
setups. So yeah, at the
And
moment,
the
the data suggests that your pro
mm,
trend setups, whether the 4 hours shifted or not, are just better, because my two best performing setups are just pro trend daily setups, but it's
okay.
split between counter trend 4 hour, because the sniper entry
Mm,
is, and again I'll get to it now, sniper
yeah.
entry is, you at a high time frame level, but your optimal alignment entry is your daily and your 4 hour, obviously in
Mm,
alignment. And those are the setups I'm seeing
okay.
playing out quite well. So,
Okay.
but I think I'll provide a bit of clarity on that now.
Okay. Perfect. So then essentially the feel is sort of like your trades, or like you feel more confident in taking the setups. Obviously, as you mentioned, there's like two types of setups out of the daily, either EPD areas. Let me just call them EPD areas. But you feel more confident out of that area when you like when price action got into that area from a daily perspective, and you are down on lower time frames. Whether you're doing option one or option two, you feel way more comfortable doing like taking trades out of that like compared to the counter trend trades.
Not always, just because sometimes when the 4 hour hasn't shifted yet, and especially when price is still at daily equilibrium and can still push higher into optimal trade entry area, there's there's always that hesitation there still, because I don't really, um, for me, I can take a trade when the daily is at equilibrium, because that obviously now you have more setups to play with, because
Mm,
you at a point, up till that point I'm only looking for trades higher. But once we get to 50%, price can either from that level head lower or retrace deeper, so there's more uncertainty there.
mm,
Obviously once the 4 hours shifted, then you've kind of gotten confirmation that the trend is in alignment now with the daily, and we're going to predominantly head lower. So I wouldn't say entirely that there's like I feel more confident with those sort of EPD area entries to the downside, because it also just depends on how deep price is going to pull
Okay.
back into discount or premium
Okay.
before we get the main move.
Okay.
So
Okay. Nah. Okay.
yeah,
That's calm.
shout
Calm.
out, shout out. So yeah, just moving into the trade parameters section. So again, like I mentioned, the 1 hour is a really good gauge of the daily trend and kind of just building on top of the high time frame overview, where the market's determined and ultimately leads to my setup selection. So this section now focuses on how I'm positioning for the upcoming sessions, the upcoming trading sessions based on the setup that I'm trading. And the 1 hour being a good gauge for daily distribution is something that ICT mentioned in, I think it was month 2 of the mentorship. And it's something I kind of just took at face value, but over reviewing my trades, I'd noticed that more often than not, the trades, like when I didn't pay attention to the 1 hour range, um, that's where a lot of losses came in. And, the few wins that I did get in that 13 trade sample size were respecting that 1 hour range. And then just looking at how that correlates with what the daily's doing did play out quite nice. So something that I'm building data on, but suggests that it does, those two time frames speak to each other quite nicely. So now going into the setup or this section, I think the parameters goes into like the setups that I'll be trading. So the first is that optimal alignment, where it's a pro 4 hour trend, which means it's a pro daily setup, meaning the 4 hour daily, obviously in alignment, and conditions will more often than not be impulsive, as this is the primary trend of the market. So in premium, daily's bearish, 4 hour has shifted bearish as well. That's optimal alignment. That trade has the least amount of restrictions on it. Normally, I can just move to my trade parameters, just moving from my high time frame down to my trade parameters checklist. And then, so these are setups that will be predominantly be in alignment. And then my resistance setup it's a counter trend 4 hour, counter trend daily setup. So the 4 hour isn't in alignment with the daily, but the entry is in alignment with the 4 hour trend, right? So these two setups are basically in alignment with the 4 hour, if that makes sense. Because optimal alignment is obviously pro 4 hour trend. The resistance setup is also pro 4 hour trend, but it's counter daily setup. So
Oh, I
just looking
see.
at, because right now the trade parameters focuses a lot on the 1 hour and whether I'm trading in alignment with the 1 hour range. And more often than not, my 1 hour range will be in alignment with my 4 hour range from what I've seen. It's not always the case, but if I had to put a number to it, it's like 85% of the time, your 1 hour is normally aligned with your 4 hour. So my optimal alignment and my resistance setup are usually will fall in line with that 1 hour range, because the 4 hour is usually correlated with the 1 hour in that sense. And then the second setup is so the second batch of now setups of the 4 is setups that usually won't be in alignment with the 1 hour range, because when I get to my checklist now, you'll see there's a portion of setups that speaks to when the 1 hour isn't in alignment with the entry isn't in alignment with the 1 hour range, and that's my sniper entry. So that's a counter trend 4 hour, but it's a pro trend daily, meaning 4 hour isn't in alignment with the daily, right? And more often than not, I anticipate that the 1 hour trend won't be aligned with the 4 hour trend, because the setup kind of calls the top or calls the bottom in a way, because for that sniper entry, I need to be in a daily or 4-hour order block within your premium or discount levels. And
Okay.
normally price impulses quite aggressively towards one of those two, whether it's premium or discount. And the trend is counter then to the entry,
Mm.
because you're kind of reaching, and then you obviously get that sniper entry pinpoint, and then that's usually the start of a reversal. And then the second entry that normally isn't in alignment with the 1 hour range is my pullback rider entry, which is a pro 4-hour trend, but counter trend on the daily setup. So you're trading corrections basically. So the 4-hour will be pro to the daily, but your entry is counter to that 4-hour trend and counter to your daily trend as well, your daily bias in a sense.
Okay. Okay. You just need
I
to.
don't know. Does that make
Yeah.
sense?
You just need to. You just need
So,
to
so the
give a
pullback rider.
example.
So I think I might have if you're looking at the plan, I maybe um no, it's right. So it's a pro 4-hour trend, right?
Mm-hmm.
Pro to the daily,
Okay.
but the entry is counter to that bias.
Oh. Okay. Okay.
So 4 hours. So let's say we're trading from premium, daily's bearish, 4-hour is now pro that trend, which is also bearish, but my entry is long.
Mm-hmm. Okay.
Hence, it's a pullback, right? Because I'm trading
Oh.
a pullback now.
Okay. I
So
see.
with that, there is an extra criteria. I think before the change, I used to be able to take that out of either a 4-hour or 1 hour fair value gap or order block. I've now changed that to only a 4-hour. So I
Okay.
need higher time frame barrier for me to be trading out of to take a
Mm.
setup there. For example, GJ at the moment, the argument for a long position is because we are at a 4-hour and a daily order block. So it triggers that setup, even though the 4-hour is still bearish and the daily is still heading lower,
Yeah.
still bearish as well,
I see what you're saying.
right? So those are basically my 4 setups: your sniper entry, your resistance, optimal alignment, and your pullback rider. And so my trade parameters, which look at the first question I ask is my trade in alignment with the 1 hour range?
Mm.
And it's either yes or no. If I am, then, so for example, if the 1 hour range for that, when I look at that session, is bearish and my entry short, whether it's optimal alignment or a resistance setup, um, I need to ask myself whether the 1 hour price is in EPD of that 1 hour range,
Okay.
right? Because I want to know that, okay, I'm trading in alignment with this range, but price is fractal in the sense that we're always looking for fair market value. So if we've created a 1 hour swing lower, we will look to retrace to at least
Create
equilibrium
swing high.
before we continue lower.
Yeah.
And that was a recurring theme in some of the losses I took, where I was taking trades in alignment with the 1 hour, but we were out of that EPD area. And we
Oh.
eventually pulled back into EPD and then continued
Mm.
lower. Don't always do, but it's just I want to be trading as far as possible in alignment with that as I can. So my 1 hour needs to be at EPD, and then I look at the 15-minute to then identify protraction, which I'll get to in a bit. Well, we'll get to now actually, because the other entry is the same. Protraction. So now I've looked at my 1 hour range. I've said it's in alignment with that, and then I look at where the price is within EPD of that, which we need to be at entry, so the 50% or more. And then what I need as well is on the 15-minute to see protraction counter to my bias before a kill zone open. Protraction
Okay.
basically being impulsive price action that induces traders into taking the opposite side of the trade that price will ultimately distribute in.
Okay.
So we're gathering liquidity,
Mm.
and it's impulsive, or you see it, I think, more often than not when markets open. We normally open strongly in one direction, and then it's that wick, it's that manipulation before we go in the other direction.
Mm.
So I think that's been like a major tweak, in that I've avoided like a lot of losses where everything kind of ticks the boxes and price isn't moving counter to my bias. So if I'm looking to go short and price is
Yeah.
just steady trading lower, then I'm like, what's going on? And look, sometimes price just continues going lower. In that case, I wouldn't have gotten an entry anyway
Mm.
because there's no reversal candle, there's nothing. Price just keeps going. But there's times where price starts heading lower in the direction of my bias at the open, which isn't, protraction counter, and then we end up shooting higher past where my entry would have been. So obviously it doesn't meet my parameters in that sense because we weren't protracting counter to the bias, but
Mm.
it saved me that loss because I could already see from the beginning that maybe where I thought price was going to distribute to in this session wasn't the case. We're still going to
Mm.
pull back a bit deeper before we do. Um, so then once I see that protraction and I confirm that, okay, we are protracting counter to my bias, usually we're protracting either into, an order block or fair value gap, either on the 15-minute or the 1 hour, or we're just sweeping time-based liquidity, which is 9 times out of 10 what we get. And then those steps confirm for me that I can proceed to entry confirmation if it's a setup that's in alignment with my 1 hour range. But
Okay.
then I also had to ask myself, kind of heading into this phase, like, what if a setup isn't in alignment with my 1 hour range? Because that can definitely happen on the setups that I listed above, my sniper entry or my pullback rider, where um, it's a contrarian type of entry
Mm.
where it's against the current predominant sort of trend, mainly on the 1 hour. And then, so if the entry isn't in alignment with the 1 hour range, then I ask myself whether 15-minute IPDA is clear. So IPDA is the interbank price delivery algorithm, and that is basically the term that describes the market, how the market moves, the market efficiency paradigm, where we gather liquidity before we distribute in the opposite direction. And it's, I think, the part of my plan that requires the most discretion at this point. But that is like a key, bro, like a tweak, like, because that's basically showing you like what the market's doing. But it's like, it's not a very new concept. I probably learned it a month or two ago, but it's something that, like, you just kind of consciously need to take note of, and not something, it's like I've described it now, but it's one of those things in trading, and I'm sure you have something in your plan where it's like you can describe something, but even if you describe it to someone new, they won't get it unless you like look for it consciously over and over again. So it's looking for pockets of consolidation, and I'm looking, where's the market sweeping, where's it distributing to,
Mm.
we enter another distribution, where we sweeping, where we distributing to, and it's not always that clear as well. So if my trade isn't in alignment with the higher time frame, then I need to be super clear that I know which way um, liquidity is essentially being generated in, which the 15-minute kind of gives indication to. Um, and that will usually come, for example, on my sniper entry, which is, again, daily bearish leg low. 4 hour is bullish, our trend, but we've got a daily order block resting in
Mm.
premium at the 62% level. And I can see that 1 hour range is still bullish, but there's a recurring theme of price sweeping liquidity lower, heading higher, sweeping lower, heading higher. as we head up towards this order block.
Good.
When
Yeah.
we get into the order block, we get the correction, we sweep higher, and then we obviously distribute lower. And it's on that distribution lower that I take the
Okay.
entry. So it's
Okay.
when, that has to be preceded by clear, we've been moving higher, gathering liquidity. And then when we got into this area, we didn't sweep liquidity to the downside. We swept it to the upside and we didn't displace higher. Whereas before we were sweeping to the downside and displacing
And
higher, and then we got the move down.
so,
So, and more often than not, it's just not clear, to be honest.
okay.
And that's been something that I think has protected me from a lot of losses. But again, it opens up, it makes my plan a bit less restrictive in that way, where I'm not only just looking for, you know, the trades that are in alignment with that 1 hour range, which obviously are the setups I feel more comfortable taking, because clear established trend, you know how we're moving, we pull back, continue lower. This is more, again, contrarian. You're calling that top or that bottom. It's counter to what a lot of the market's seeing. So it carries a bit more risk in that sense. But again, the way I'm doing it is using a principle or concept that is a bit foreign, but does require a bit more discretion. But the accuracy of that discretion is only really like improved over time, like looking at how the market behaves in that way. So
So
yeah,
Sam, quick
that's
question
basically,
on
yeah.
this if this setup, if I'm pronouncing it correctly. So we have sweep of lows and we continue in high, sweep of lows continue in high, and we get into the daily POI order block, right?
Mm,
And let's say, for instance, in the case we get in around Asian session and we form Asian range, and
mm,
essentially what you're saying is we're going to induce liquidity to the upside, displace to the downside, break structure, right? After having all those sweeps to the downside, but pushes to the upside into the level, right?
mm.
Once we're in there, you're basically saying we can sweep the upside or induce liquidity to the upside, displace to the downside, shifting structure essentially. And then do you look for that pullback for the entry, or do you look for confirmation first before you enter?
So let, let me complete explaining this, because that's where it gets even risky, I feel. So once I'm clear that I'm seeing, IPDA on the way up to my entry, I can see that price is displacing higher, even though I'm looking to go short. My entry confirmation after that is the same. So I don't wait for the shift of structure per se. I'm almost calling the shift of structure, because one, I still look for the protraction counter to my bias at the kill zone open, which to me
Mm-hmm.
indicates that we will distribute lower. Because technically, if we were going to continue higher, we would distribute for in the short example. If we were going to continue higher, we'd protract lower, would sweep the liquidity, and
Get
then we distribute higher.
induce.
But at my entry, if we protract higher, we sweep the liquidity or enter then our key indicator area, then for me, that's signs that we're going to
Okay.
distribute lower. But then
Okay.
that's coupled with daily 4 hour order block, daily EPD.
Mm.
Again, it's just calling the top of the bottom. So I don't wait for that shift of structure. Um, it's it's arguably more of a high time frame setup, and I'm just using that um, sort of 15-minute structure to then get an entry within where I think the 15-minute is going to shift after that.
Okay.
And yeah, funnily enough, that's one of the setups that's been the most successful of the four of mine. Maybe because it's more of a high time frame setup than anything.
Mm. So
So I
is
think that, yeah.
essentially what I'm understanding is you're saying you're looking for a shift of buy side liquidity, and a pop, or not a shift, but like a sweep of buy side liquidity. And right after the sweep of buy side liquidity within that point of interest, you're taking it immediately after that.
So after the sweep, I still look for my entry confirmation, which we're going to get to now.
Okay.
Once I
Okay.
get my entry confirmation, then I can execute.
Okay.
So trade parameters, they focus on the 1 hour range. It's either I'm trading in alignment with the 1 hour range or I'm not. With both of those, I still look for protraction counts to my bias before or during the kill zone open. And then I look for a time-based liquidity sweep on the 15-minute, as well as, or not as well as, time-based liquidity sweep or mitigation of the order block or fair value gap as we protract to then seek entry confirmation, which is the next step. So with my entry confirmation, once the parameters have been confirmed and the setup is clearly in line with the plan, then I drop down, or I'm already on the minute 15 time frame, and I wait for a close of a reversal candle coupled with either a 1 minute market structure shift or a 5 minute key indicator area invalidation. And I'll say shout out to you on the 1 minute market structure shift thing, because it's something I was like debating adding like an extra layer of confirmation to like my execution. And then when I saw that one of your entries, you also look for a 1 minute market structure shift, I was like, all right, no, like it was almost like validation that that is a good confirmation to add. And when I look back over the 13 trades, I was looking at, what confluence was there on the micro timeframes with the setups that worked and the setups that didn't work. And I found with most of them, there was either a 5 minute key indicator area invalidation or 1 minute market structure shift coupled with that 3 minute reversal before price played out. So in terms of my reversal candles, there's 4 that I look for. It's either an engulfing candle, a retrace candle, doji wick, or a double opposing. My engulfing candle is basically the wick and the body fully engulf the previous candle. The retrace is similar to the engulfing, but it doesn't need to fully sort of engulf the previous candle. It's more so like 100% retrace of the previous candle, between an 80 to 100% retrace. But that's my retrace candle. It's like the candle almost fully retraces the previous. Doji wick is clear sort of indecision. I like it when we do have a large wick counter to or in alignment with my bias. So if we're looking short, then price obviously at the start of the candle trades higher aggressively, and then by the time we've closed, we fully retrace that, and we close very close to our open, but we've obviously left that large wick there, which indicates we attempted to maybe trade higher, but there was pressure to the downside. But it is still a low volume candle, and I'm finding that that has the lowest strike rate of my reversal candles from playing out. And then the double opposing is basically 2 candles which print in the direction of the trade that I'm looking to take. The second candle is kind of just used as an added layer of confirmation, because the first candle usually lacks that conviction. It's not an engulfing, it's not a retrace, it's not a wick. If I'm looking to short, it's the bearish candle, but it's not like a strong bearish candle that I can categorize as any of the ones I've just described. And so I normally wait for another candle to close. If it closes again in the direction of my trade, then I'm like, all right, cool, it's go time.
Essentially a morning or evening star, right?
Maybe because the morning evening star is normally bullish for your evening, bullish doji retrace,
Or small,
little. Yeah, it could be. Or what it would probably be is a 30-minute retrace. If you look at 2 15-minute candles counter. So I mean, I haven't looked if that's what they are, but yeah. And then a confirmation of the minimum 3R multiple in line with my risk management below. Risk management that I'll explain now. Before trade is executed, as well as no high impact news released within 30 minutes of my trade, just to avoid that volatility risk. So those are kind of the steps I look for. Before, it was mainly just obviously 15-minute reversal, obviously no high impact news, as well as looking at my risk to reward. But now I've just added that extra layer of the micro time frame confluence. And that's basically what I'll look for if we go back to the 15-minute IPTA entry. Is I'll wait for that to be met after the sweep of liquidity to then confirm that, okay, I can execute. So yeah, that's the entry confirmation, and that's in sense my my decision-based process from my high time frame right down to how I execute a position. And I'll just touch on now my risk management, just because I'm keeping an eye on the clock there. Risk management phase 1 and 2 is the same. I essentially start at 0.5% risk per trade. This is the lowest percentage risk that I'll take, and it allows me about 22 trades to be taken before the account is breached at the maximum drawdown of 10%. And that's if all 22 are losses. And I've literally made notes. I'm like, if that happens, I just wasn't ready, to be honest, because there's no way in hell I'm taking 22 losses in a row.
Yeah.
And I can still argue that I was ready to pass the challenge. So that, in a sense, just kind of makes me feel better about the risk that I'm taking. I'll then increase my exposure to full 1% once I'm 3% in profit from my starting account balance. So at $103,000. And I maintain this risk exposure until the full profit target of 10%. 10% for phase 1. I think it's 8% for phase 5%.
5%.
5% for phase 2. And then if the account balance drops to the initial balance of 100,000, then I'll revert back to my initial exposure of 0.5%. So it gives me at least 3 trades on full risk if all of them are losers again, which maybe correlates nicely with my maximum sort of lose streak, which is about 4 odd trades. At least over the last 15 or so positions. In terms of maximum daily drawdown, 4 pairs on my watch list. And if all 4 pairs are shaping up for a trading session, then I use my discretion to filter out the best 2 setups to execute from. And so I can therefore execute only on a maximum of 2 sessions per trade. Because my maximum daily drawdown is 2 consecutive losses. So I don't want to take 3 trades not knowing how the outcome will be, because the worst that can happen there is I take 3 losses. So I'll only ever have positions open at the same time.
That
and that's
two
for London
trades
session.
position? Is it 2 trades position?
Oh, so I think I might
you
answer
said
your
2
question.
sessions per trade.
So
you
2
said
trades per session. Yes.
Sorry. Okay.
2 trades per session. And then I have a maximum daily drawdown, 2 consecutive losses. And so that capital loss is marginal, but I think it's more the psychological impact that is more significant there. Not wanting that to spiral, I think, on a daily basis, because that is essentially a maximum of 10 trades in a week, if all of them are losses again. So if I execute on 2 position and one closes in a loss and the other's floating in profit, I essentially can't enter another position unless the open position's at break even, because even though the one's in profit, if I'm not at break even yet, I can't get excited that it's in profit and take another position, because that one could come and stop me out in a loss. And then now I've taken 2 losses, and then I've now got another trade open, which could also come out, as a loss. So it's just always making sure that in any scenario, the maximum losses I'll take in a row are 2 trades, which then frames, how and when I can, or how many positions I can actually be in or execute for a day or session. So if I take if I take 1 trade in London and it's a loss, it means that for my next New York trading session, can technically only be in 1 position, because if that also loses, then it's 2 consecutive losses for a day. Doesn't mean that I can take 2 trades in that session. So I'm on this thing of taking sessions, bro, instead of trades.
That happens. It happens when you chat a lot, bro.
Bro, That time I didn't think I was gonna pride the session, bro. I'm priding now.
That happens, my boy.
Right. Trade management, minimum targeted risk to reward is 1:3. Discretion will be used when setting take profit, as it can be placed at the nearest or most relevant 15-minute, 1 hour, or 4 hour low or key indicator area. So I use structure to set my TPs most of the time, but am trying to be a bit more conservative on that. And look, if it meets my minimum 1:3, then I don't want to overshoot that too much. But yeah, being mindful that look, I can set it at a 1 hour, 4 hour. I think again, it's just using a bit of discretion there. And then once price reaches 1R profit, I apply the half risk method, which is basically cutting half of cutting my stop by half the amount. That's just to take some risk off the table, take 50% risk off the table. And then once price moves 2R in profit, I close 50% of the position just to bank some profit. And then stops move to break even. So that if price then comes all the way back to my entry, look, I'm stopped out, but I still bank profit. If we move to full TP, then yeah, we get the benefit of that upside. So yeah. And yeah, and then I actually did. Oh, I see my modeling outcome section that actually didn't come out right in my contents. It actually is here. So I basically just looked at all the possible scenarios of what can happen, whether I'm taking half risk or 1% risk. Basically, if I take half risk, can either take a full loss of 0.5%, a partial loss of 0.25% if I move to 1R and apply the half risk method, partial profit of 0.5%, 2R half closed, and then stopped out at break even, or full profit of 1.25%, 2R half a percent closed is effectively, full profit is minimum 1.25%. 2R half closed, I bank 0.5%. I effectively have 0.25% running. If 0.25% runs to 3R, then that's 0.75. 0.75 plus the 0.5 that I
Plus your
banked
0.5.
is 1.25. So that's obviously the minimum if I'm set at 3R. Say for 1%, full loss 1, partial loss 0.5%, partial profit 1%, and a full profit 2.5% minimum on a 3R. Obviously, max whatever it can be. So that almost also, like going into a trade, like I know there's one of four things that can happen in this position. And obviously, each time something happens, 1R, then I know, okay, I move 1R, one of three things can happen now, right? 2R, same, and all of that. So that I also just manage my expectations throughout kind of every process of the position. And that kind of keeps me in line with following the plan. And then my process and intentions, kind of just to close off, my goal for this plan over the next 20 trades. I just want to achieve a strike rate of 40%, currently at about 33.33%. I think 40% is relatively healthy in that I don't like a strike rate that's too low, because sometimes when the drawdown or the losing streak gets a bit too intense, I feel like, hey, for me personally, it becomes a bit unsustainable. So while it's like, yes, arguably, if you have a good risk to reward, you don't need a exceptionally high strike rate. I think also the way you execute your plan gets influenced by your psychology at the time. And I know, after like 6, 7 losing streaks, so like in a sample set of 10, if I'm taking 7 losses, which is a 30% strike rate, your boy's not all right, bro. Like I'm
Yeah.
maybe not operating at the same level as if I only took 4 or 5 and the other 5 are winners. Then it's like it kind of balances out, and you're right. You still got to know that you can take 5, maybe 6 losses, but over the sample size, you'll, it's you operating in a consistent way, in a sense. So I just want to, I'm testing if this plan can achieve 40%. That's an intention. um, I want to achieve a return of 5% on my initial capital. That's over the 20 trades. Like, that's just like a minimum goal for me, which, look, doesn't pass phase one. But at the same time, I'm like, bro, but like, look at your data. When last have you done 5% in a month? Not 5R, 5%, because obviously my risk is a bit lower in the beginning. So
Yeah.
it's like, I'm not saying I can't pass it, but also I'm just looking at what my data is, and we're trying to make those incremental like improvements. And if I can say that, okay, over the set we achieved 5%, that's like a very positive sign. 5% will obviously translate to a lot more on an R multiple basis, and that might, allow me to increase my lowest risk, that I have on the account. If I see what the plan is capable of over this, or maybe two or three, sets, whatever it is. And I haven't set a sort of profit target in a while, so I'm a bit like hesitant on that, because it also depends on what the market can give me. But I also want to see that the plan's profitable, and I don't want to leave it
Mm.
too open-ended in that sense. So I'm gonna put that in, but I've made it conservative. I don't think that's something that can't be achieved. Um, and then the last one is kind of just maintaining a margin of error of 10%, meaning over this 20 trade set, um, I only want two of the positions to be kind of invalid setups where it doesn't meet the plan, just so that I know I'm sticking to the plan as far as possible in my entry management, like the whole process. And already I'm on one invalid position, which was my position last week, where I kind of misinterpreted the protraction as entry confirmation, where it wasn't that case. So kind of got like one mistake in that sense to make. But that's also just going to help me keep track of how often am I deviating from the plan, whether it's like a technical error or like intentionally I did kind of thing. But yeah, that section was a bit difficult, because I feel like it's a bit hard to set sort of KPIs in this, but I think those are like a bit objective, but also ensuring that I'm just focusing on the right things. Um, and also just kind of just being realistic with the outcomes in that sense. And I've just made a note as well. So the above goals do not mean that I cannot pass phase 1 and 2 of the challenge over the next 20 trades. It definitely is possible, but if I look at it statistically, not probable based on what my current data is. And, that's all right. Remember, it's a marathon, not a sprint. Stick to the process and the outcome will take care of itself. So yeah, it's just being able to look at, I think, your data very brutally and saying like, what is this plan
Mm.
capable of over the next 20 trades? This wouldn't be the same goals that I set for a 100 trade sample set, but over the next 20 trades, can do this. 20 after that, arguably
100%.
going to look a lot different.
Mm.
So, and then, yeah, I think just to wrap up, as we know, the processes of consistently profitable trader, consuming content, forecasting setups daily, performing advanced self-review weekly, strategy development, and building the modern day trader channel. All of those aren't foreign, I think, concepts. And I think building up into the 100K challenge, I've just dialed into those processes, which have produced the plan that, yeah, I've kind of just explained now. And just very, very stoked to see how we continue to optimize and kind of improve the plan as we kind of cement the consistency that we've developed already. I honestly believe we're already consistent, bro. Like,
Yeah,
it's just a matter of
100%.
time for the outcome just kind of aligns with the action that we've been taking, in the form of withdrawals, consistent profitable weeks, consistent profitable months. The action precedes the outcome, and the action's been there, bro. So yeah, that's the plan. That's the plan, Brody.
Yeah, bro. That's quite an in-depth plan, bro. That's actually quite an in-depth plan. So shout out, shout out. I think
Uh,
the work that has gone into like everything up to this point has been like, I think it's really deserved a pat on the back. And
shout
as
out.
I mentioned to you, like the job's not finished. Like I mentioned that on
Mm,
Wednesday. Like Kobe Bryant said in the finals, I think it was game 6 or something like that. And they were asking him how does he feel going into the next game. He's like, no, we won, but the job's not finished, bro. The job's not finished. Now we
mm,
haven't won anything yet, but I think the work that we've put in thus far and like the long nights, early mornings deserves a pat on
mm,
the back. And you deserve to be able to say, like, I've put this work in, and now it's just about executing the plan. You know what I mean? You've
mm,
got the plan now. And as you mentioned, you got your goals for the next 20 set of this plan. And that
mm,
in and of itself deserves somewhat of a just like, okay, we've put in the work. We did everything we possibly could in our power, and I feel like that's always what we wanted to do, is to be able to say like
mm,
we've given this our all, you know what I mean? And like from my side I can say, hey bro, shout out, like the plan is quite comprehensive, it's quite detailed. I think it details everything that you need to in order to pass the challenge. As you mentioned,
mm,
it's probable, uh but like I think it's a matter of just being able to say, I've done the work, bro. You know what I mean? And now
mm,
we obviously going to
mm.
continue doing the work, as you mentioned, it's part of our processes and our intentions of being and what we are really consistent traders. You know what I mean? So yeah, guys. Sam, is there any last thoughts before we wrap up?
Ah, only last thought I have, bro, is that consistency is the choice you make when you start doing the things you know you should be doing day in and day out. That's me, bro. Let's
100%,
go.
bro. Guys, as Sam mentioned, consistency, consistency, consistency. And with regards to trading, just remember to execute, execute, execute. And the only results you're going to get back is results that's going to make you better, and stay at it nakedly and just look at it and take it as it is, and
Mm,
and pivot where you need to pivot, and make the changes where you need to make the changes, hold on to whatever you need to hold on to, and formulate a new
mm,
plan and hold whatever you need to in that plan. So with that being said, guys, I hope you enjoyed this in-depth breakdown of what I think is going to be a really profitable plan. Whether it meets the goals or not, I think it's going to be a really profitable plan in terms of R multiple. And I think I honestly hope that you do get to that 5%. So, guys, from my side, I hope that you guys remember that your unmatched perspicacity, coupled with your sheer indefatigability, makes you a feared opponent in any realm of human endeavor. So, from your boys at the Modern Day Trader, have a wonderful week, a profitable one further, and peace out, man.